and welcome back to Dukas Copy TV. Today in the studio I'm joined by Mario Geniale, Chief Investment Officer at Banque CIC, to give me his predictions for the markets over the next few months. Thank you, Mario, for joining me today.
Thanks for having me.
Today is the final day of the EU summit in Brussels. EU leaders have decided that using the continent's bailout money to fund directly into struggling banks is the way forward. Has this had an effect on markets already, and will we see an effect on markets in the future, do you think?
Well, we've seen an effect obviously today. Markets have been very positive. We think that it's just the first step there in that direction. We were expecting some kind of a statement. We were a little bit surprised of this statement today, which was actually very positive in our opinion. But we think that there has more to come, first of all. And secondly, the devil lies in the detail. It's good to have ideas, but the problem is how to bring it to the market. And the problem also is that what we're seeing right now is a confidence problem. And we want to see that the market has, that it gets back the confidence from the EU, that the EU is capable of managing the situation.
And just looking at the graph behind me, this is the Euro Stoxx index based on the first day after the EU meetings for the last 5 meetings. From your research at Banque CIC, do you see a correlation here? Is there a pattern emerging?
Well, it really seems that the market generally in the first 3 months after the summits, that the market acts positively, reacts positively on the statements. Usually what we've seen is that at the beginning market is still a little bit nervous. There's some question marks about the kind of statements, how they want to implement them. So we see that in the first days that sometimes the market first comes back. But if we see the performance over the 3 months, we see that in general the market has gone up by at least 4% in total after 3 months. And on average, we have seen the market going up by about 6.5%. So it really very much looks like that the market takes it positively, but it needs some time to digest it and to have an idea how they are going to implement all the things that they have decided on these meetings.
So what are typically the best performing sectors in the wake of an EU summit meeting?
Yeah, it's very obvious that the ones with a high beta, that these are the sectors that are having the best performance in the 3 months after those meetings. We have seen that basic resources has done on average about 14%, and obviously also the bank sector. Bank sector has increased by about 10%, but you have to say with a quite high volatility. So what we see also is that the personal and household goods sector has increased quite nicely, somewhere around 8.5% on average the last 5 times over 3 months, and with a much lower volatility. And that would be the sector where we would start buying.
So moving on, looking at China. China obviously has a big effect on the US. It affects trades, investments, the value of the dollar, and it affects everything within the US. So just looking at the graph behind us, this is the Nomura China Composite Leading Indicator. How can you judge the US markets by this?
Well, first of all, what we've seen is this Nomura China Leading Indicator Index. It's moving up since last November, which is surprising because we had figures from the official part, where the official PMI, Purchasing Manager Index, which was weaker in the last months. And instead, this Nomura leading indicators is pointing upwards since last November. That's the first thing, and it acts really as a leading indicator also for the S&P 500 index. And we can see here in this dark red, we see the performance of the S&P 500. In the light red, this is the Nomura indicator, and you can very well see that the Nomura indicator, whenever it starts turning, then usually also the S&P 500 index starts turning with about a lag of about 2 to 3 months. So that said, what we see now, that since still this indicator is still increasing at the moment, we are not that negative on the next 2 to 3 months for the equity market. We think that it could well go further. And there again, same as for Europe, we would buy into weakness, some weekdays with 3, 4, 5% minus, we would try to start buying some of the equities.
I see. So just in a bit more detail, using this and also your research into what happens after the EU summits, what can you see for markets in the next few months?
Yeah, so we would remain slightly positive. We are at the moment cautious for the next 1, 2, 3 weeks. We will see some weakness, or we expect some weakness in the markets. As I said, there have been some statements now this night that we have seen, but the market still has first to digest them. It's still a matter of confidence if the EU is really capable of implementing all these things that I've said and calming down the market fears. We would expect that we will see some lows within the next 1 or 2 weeks, but from there on, as I said, I think it's probably a good time to buy for the next 2-3 months into the autumn of this year, and then we would have to look it up again.
See. Thank you very much for joining me today, Mario. It's been some great insights.
Thank you very much.
That's all from us here at Dukes Copy TV, but stay tuned for an interview with Jean-Marc Sabet, his predictions for the Euro dollar and the dollar Canada. Until then, goodbye.